So welcome back to order block strategy. Today we're going to talk about discounted pricing and the premium pricing. It's a small concept along with the trade I took today in the New Zealand dollar US dollar pair. So using all these concepts that I taught so far. Okay, so there are a lot more to come, but you can relate those whatever you learned so far to this trade. Okay. So without further ado, let's get started. Okay. Now, by now you already know what is an order block, how to refine order block, what are the trading ranges or the structural ranges, and how to identify those in the market. If you don't know what are they, so go back to my previous video and come back here again. So it will all make sense why I took this trade, and so right. I would talk about discounted and the premium pricing. So what do you mean discounted or premium pricing? So let's say, for example, you identified a trading range. Trading range is, let's say, from this low to this high. Okay. So this is our trading range. We are looking to buy from this range. So the concept is, if you're looking for buy, so you need to have discounted price. You need to be in discounted pricing, which means 50% below of this range. I wouldn't be buying above this green line. No. So at least I need a price below that green line in order to consider a buy. Okay. It doesn't mean I'm going to buy it, but just to consider a buy, I need a price below that. Other than that, I'm not touching it, right? So that's the concept. In case of sell, it's above in the premium pricing. Okay, just opposite of the buy in case of sell, right? So that's called a discounted or premium pricing. In case of buy, this is a discounted pricing. This block, and this is a premium pricing. We don't want to pay premium price in case of buy, right? So buy low, sell high, right? That's concept. Okay, discounted and premium pricing, it's called in the industry. Cool. So let's dive into about today's trade using the concept that I taught you so far in the order block strategy, right? Okay, let's go from the top down. Okay, so what I see. So when I saw this pair a couple of days back, so I was trying to find out, okay, what the current market doing. So if you see, this is the latest low, and this made this high, right? Right. So this is low, and this is the high. Okay, so I see a order block right here before the big move happens up, right? So I have marked that order block. Okay, so that's the order block. So price is reacting from here. Okay, so I got interested, and I go back to the 4 hour. Okay, which is our remember 4 hour or daily or weekly, that will tell you the direction what you're gonna do. Okay, below that, below that structure is not that important to us in order to make the directional bias, right? So what I see here, okay, this is the low which got broken. So now my trading range for sell was this. It was bearish market, right? So I saw this range got broken. So now I'm gonna my bias is shifted to bullish in terms of 4 hour. So this is our trading range now. So, and what are our discounted or premium pricing? So if I go and remove this, take this tool, Fibonacci 50%. So I want to buy from below this green line. That's one of the criteria, right? So now, if you follow the structure here, what happened? Up, retrace my. So immediately I find this order block which broke the structure, but I missed already this state, so I wasn't here. So today morning when I saw, okay, so this order block needs to be break this structure. Okay, so that's order flow, so we'll talk about that later. It is a mitigation play. If it is mitigation play, it needs to break above this yellow line. Okay, so that's what I saw, and this is the order block latest one which broke this minor structure. So today, so let's make it green. Okay, so we'll be identify. So we'll go down the time frame down and refine this order block. So this is a second video refining how to refine order block, but so this order block, okay, so this is how we refine. Okay, so this is 3 hour, 1 hour, 45 minutes. So what do you see? So I see this is the wick which has some 30-minute order block here that needs to be mitigated. All right, so what is mitigation and thing we'll talk about in the coming videos. All right, now so it needs to come back here, mitigate these orders, and then go above. Right, so then I go back to 5 minutes, same structure rules. So what I see price came to my order block, and this is the low, and this is our structural range for 5 minutes. Now where is the tool? This is the low, this is high, this is low. That's the range. That range got broken here once, so which is a break of structure here. Okay, so we'll be looking to buy from here because it's reacting from our order block, our point of interest. That's a green zone, which is our refined order block. Right, now we want to buy from here again. That rule, discounted pricing below 50%, and we saw this one up happen here. It didn't break structure, but look here, it tried to break, it just wicked out. That's a break of structure for me. Some people have uses body and the stuff, but I just use a normal rule to, if it is break, it breaks. Now, so what I see here, so this is the order block. So what do you see? This order block needs to mitigate it and break the structure. So we place the order here, stops below this red candle, and it's still moving today. So was expecting to go at least here in couple of days, maybe today, tomorrow. So yeah, it's a 34-hour trade. 34-hour, it means 34, if you're risking 1% of the account, 34% gain if it plays out. Obviously you're going to take partials along the line, that will reduce your true hour, but yeah, so but it's still, no one will, it's amazing, it's crazy. So that is it about this video. So we'll talk about the other concept in coming days. Okay, so stay safe, see you after, bye.